Hey, welcome back. MPW has reported its Q2 earnings recently and there are a bunch of developments. Even if it began as a 5.5% drop, the stock rose by about 10% from that level, ending the day on a roughly 5% gain thanks to the recent data from the US. Probably the most important thing, they announced a bunch of recent deals to secure capital, reaching $2.5 billion in transactions this year already, but I'll talk more about this in a second. They reported a net loss due to about $700 million in impairments and negative fair value adjustments, offset a bit by $384 million in real estate gains. The AFFO fell to around $113 million, which is a big drop, but that's money they make after interest, because it begins from the net income, so this is not such a bad number. So for a company with this level of tenant issues that scared the market, they are making quite a lot of money. Financially, they are still in an okay position, with the assets above the liabilities even after the adjustments. This balance sheet doesn't include all the asset sales and subsequent debt repayments after Q2 ended, by the way. But to continue securing capital and making sure they get over the upcoming 3 years of debt, which are the main concern, they also cut the dividend almost in half, again. As I said in almost every previous video, I don't mind it and I actually wanted to see something like this. That's close to a 7% yield now, but I don't see them as a dividend stock today, even if they are a REIT. The thing I kept saying is that to repay the debt, they have 4, but realistically 3 options, because issuing shares is out of the question. They can either cut the dividend, sell assets or refinance. The most efficient one is, of course, cutting the dividend. Now, they are a REIT and there is a minimum they have to pay, but at some point they were paying well above that level. Then they can sell assets, which is an easy way to get a big chunk of the money they need, but it has the effect of lowering the company's future income, which can then lead to a dividend cut. And finally, refinancing or issuing debt to repay the current one and basically push the maturity in the future. Doing this now with this kind of interest rates and in their market would easily generate some double-digit interest, which can then hurt the dividend as well. They went for all 3 of them actually, which I think was the optimal thing to do, because if they overdo any of them, it can have a negative effect and cutting the dividend has a limit. Every dollar that they pay as a dividend now is a dollar they have to make by either selling assets or getting debt later, so a temporary dividend cut remains the optimal option for everyone. Now, I think the market exaggerated everything related to Steward's bankruptcy and other tenants having issues. It's not about that not being a negative thing, because it is, but the effect has been very much overestimated. They are after all tenants, and the main negative effect of them having issues is that it would have an impact on the money they make, which can then lead to selling more assets or higher refinancing. Still, I just don't see that being worth an 80% crash. But with all the shorting and people who bought it for the dividend selling, there has been a lot of selling pressure while the demand kept being affected by the negative and often exaggerated news. Anyway, I really don't see this as something you'd buy for the dividend. It has the potential to pay a very significant one after the issues are over, but until then it can be very uncertain. If it was possible, I would have preferred if they didn't pay a dividend at all for 2-3 years, but again, they are a profitable REIT, so they have to. In Q1, MPW said they see Steward mostly replaced by around September, so that could bring a boost to the AFFO. If they manage to do that, I think we might be well into a recovery, because if they keep selling assets and offsetting the debt, 1-2 more years like this one would fix the company's biggest issue. Still, the upcoming rate cuts will be beneficial especially for their tenants, so a couple of years could lead to them almost completely recovering. There is risk, but there is also potential for a short squeeze, which can lead to some really incredible upside. Right now, shorting stands at around half of the float, and it would take over 17 days at this volume for them to cover this position. So if there is a recovery, that can be boosted by so much demand from shorts and people who would follow the uptrend. It isn't a GameStop level of shorting, but it's still one of the most shorted stocks on the market. We actually saw MPW jump a lot when GameStop got some attention again, so there is definitely some attention being paid to them as well. Now, is all that shorting justified? I don't think so from a fundamental point of view, but there is always the risk that I'm wrong. Again, it's all a matter of risk and reward, which for me looks very good. But now we also have fear of a recession, which can have a negative effect especially on the tenants, so keep in mind the risk of issues persisting for a while. It's early to get to conclusions, but we saw them briefly crash quite a bit due to this recently. But if there aren't economic issues and the Fed begins cutting the rates, this has very real chances of doing well in my opinion. Again, a couple of years and all the uncertainty and worries about the debt and the tenants will be resolved. Still, the management has to play it very well. The valuation is not that complicated in my opinion, and I think two scenarios are enough to get an idea. In a negative scenario, after selling a lot of assets, let's say they stabilize at an AFFO of 400 million. For a ratio of 10, which is historically for them on the lower half, that's a 4 billion market cap, meaning a price of around 6.67. So even this would be a roughly 40% profit. Pay 90% of that as a dividend, and from the current price that's a 12.5% yield. Sure, it can obviously be worse, but I'm talking about what could happen in the event of a recovery. If there are significant issues or even legal trouble, as some people allege about the management, it can be very ugly, like any other company. In a positive scenario, with rate cuts and after they get over Steward, let's say they get back to around 750 million. As a note, they were making over 800 even with the tenant issues, but selling assets would decrease it. With rate cuts and some market optimism, let's assume a ratio of 12, which might still be pretty low. That's a market cap of 9 billion, meaning a price of almost exactly 15, which is more than a 3x from the current level. 90% as a dividend means a 23.5% yield today, so you can see the potential. Sure, the ratio can be 15, 20, or there can be a short squeeze, but you get the point. So you can see how this can easily be attractive if they get over the current issues. From the looks of it, that might be very likely to happen, especially if we get some rate cuts that would allow them to refinance at a better rate. We can see the market paying very close attention to them, especially on news that would influence a rate cut, with several 5, 6, 8% jumps during days of positive news. If we get a higher than expected cut in 2024, I think this could easily jump. Overall, MPW's risk and reward are worth it for me. I have a position that I developed in time, and now I'm waiting to see how it advances and maybe buy a bit more if I get the chance. Again, I don't see it as a dividend stock now, but in the future, if they recover, they can pay some really good yield on cost. I think Steward going bankrupt was actually a positive, because that way they can diversify the tenant portfolio even more and the market won't be able to use them as an argument. Still, they've been making the right decisions so far, and it's been quite interesting to see the way they navigated this environment. With so much shorting and previous selling pressure, there is potential that if they recover, the stock would do really well. As always, what I cover in my videos shouldn't be enough for you to make any investment decision, so please do your own research before investing in anything. If you want to see more videos like this one, please leave a like and even a comment to help me out, and make sure to subscribe. Thank you for watching, and I'll see you next time.